Hi, it's Lee and welcome to the Tesla Economist. Alright, in the last video we spent a great deal of effort making sure we got the ASPs right due to all these new price rises, along with the exchange rate issues and the new margins we might see from the prices being so much higher. It was so much effort it required its own video. But now we have the answers we're looking for. Just as a reminder, we had an ASP of $54,500, including FSD, $53,000 without, 18.7 billion in auto revenue, 33.3% gross margin, and $6.2 billion in gross profit for autos, both without regulatory credits. Pretty amazing, but just another quick reminder again, this excludes the 22,000 vehicles that Tesla didn't get to deliver. So increase it all by about 7% if you want a more accurate representation of where Tesla really is today. Let's move on to the rest of the financials. I'm going to give us $300 million in regulatory credits this quarter, bringing total auto gross margin to 35.2%, which is starting to look really high. And remember, this is Tesla expanding their lower range rear-wheel drive variants. It's only going to get better when they start expanding their 4680 long-range Model Ys that sell at much higher price points, with more margin, tax incentives, and battery subsidies. Yes, lots of great stuff still to come. This brings Tesla's total gross profit for autos to $6.5 billion. I think this quarter energy might have done a bit better now that Tesla have had so many more LFP sales, and they had mentioned that they are no longer constrained by sales there. So I'm giving energy $1.1 billion in revenue. I also have high hopes for the new Megapack factory being complete soon and perhaps starts production early next year. This will make a big difference in energy, finally. Services and other seem to continue to grow. As there are more Teslas on the road, it only makes sense. And eventually this side will also start to expand as Tesla's sales grow exponentially. However, I'm not expecting it to yet be profitable, but we will keep it as break even. However, due to all the LFP sales in energy costing a lot less than the former 2170 cells they were using, I'm going to actually give energy a profit at just under 10% margin with a gross profit of $100 million. This brings our total gross profit to $6.6 billion. Under OPEX, I'm going to allow $100 million for the line upgrades in Shanghai. Research and development shouldn't have risen anything too significant. Perhaps we can add just a little bit more on due to robotics research perhaps. Selling, general and admin, I think might have actually reduced due to some downsizing and now relocating headquarters into Texas instead of Silicon Valley. This gives us $4.8 billion in operating profit, about double from Q2, and 37% more than Q1, which after tax is $4.3 billion GAAP earnings net income, which comes to $1.23 EPS, or the all-important non-GAAP EPS at $1.34. Again, not far off double Q2, and still up 27 cents from $1.07 in Q1. This spreadsheet's also available for download in Patreon. This is obviously way above the street's estimate, as usual. Now, would a result like this move the stock price? I would say there's a good chance. I would hope that we see 250 again soon enough, and perhaps this result will give us a bit of a base in order to achieve that. And this is what the market uses to value Tesla on. It doesn't care about the actual performance of the company, just the results it puts on paper. Two very different things. At the time of this video though, Tesla's stock price is $219 with a market cap of $687 billion. If I annualize these net profit estimates, it comes to $17.2 billion. Not too bad, but it comes with a PE ratio of just 40 at these earnings with the current stock price. In my opinion, we are a long way having a PE ratio of 40, given how much more potential this company has. So I'm not worried about how insane the market takes the stock price, and it is not an accurate reflection on the value of this company. But I would actually go a step further again and declare that even that is not an accurate profit for this quarter, due to the fact that about 6% of the vehicles produced didn't get delivered. That could definitely contribute to the success and value of the company. So to give you a rough idea, if I did include the 22,000 additional vehicles that were not delivered, that adds an additional $1.1 billion onto revenue, or $370 million on gross and operating profit, taking net profit up to $4.7 billion and non-GAAP EPS to $1.46, which is where it should have been. Quite a big difference. Annualized, it is now $19 billion in net profit, or a PE ratio of just 36. And people keep saying Tesla is overvalued, and some think it's going to drop a further $100 in the stock price. And that is still an average of the entire quarter, of course. There was a lot more production happening at the end of it than there was at the beginning, with higher profit margins too, due to the massive line upgrade. But then all of this is still absolutely minuscule when compared to these two massive factories, which are the core of the future value of the company, which of course still depend on 4680 sales. And an update on where we are with those is what I look forward to hearing about most on the earnings call. Hopefully it's all good news. I think shareholders need to hear from Elon and the Tesla team in any event, and be reassured that the company is still in good hands. There's been a tumultuous level of FUD circulating, a lot of negativity that has snowballed. Investors are losing their rationality when it is the market that is really the one being irrational. But your sanity through it all just makes you a better investor than those who couldn't handle it. Anyway, we've moved on, and a lot of these new advances will be reflected in Q4. Not just the Shanghai ramp, but the Berlin ramp too. Hopefully 4680s start to ramp properly in the first quarter of next year. I think when they start going, we could see a more realistic perspective in the stock price, and it should recover to around where we like it to be. Then it should eventually hit its all-time high. Yes, even in this economy. But for us to see the numbers we're really hoping for, then I think that will take the Cybertruck. I think when the world sees the Cybertruck in volume production, it will be another major pivotal point for the company, and the stock price will eventually react. Elon says volume production next year, but there's lots of new technology and never before seen manufacturing processes, so we can almost guarantee they'll run into some sort of issues, and Cybertruck volume production may not happen until earlier in 2024. But I think the world is waiting to see if this can really be achieved. Then the stock price will react. Granted, we do have FSD on top of that, but it is less tangible until it passes regulation, which could still take a couple more years, once it's as safe as a human even. So I'm hoping Cybertruck is sorted before then. A lot of people want an update on that truck though. Last I checked, it was the #1 question for the earnings call on say.com, so we should get some answers, accompanied with some in-depth 4680 updates. Anyway, this quarter was alright. It wasn't the quarter it was meant to be. Well, Q2 was meant to be great, with all those price rises and huge margins and the new factories opening, but they didn't work out so well. And then we had the lockdowns. So Q3 was meant to make up for all of that. And then in addition to that, we suddenly heard that they were upgrading Shanghai. And all in all, the production numbers were alright, but we still didn't see too much action from the new factories. And now I'm hoping Q4 is going to be this magic quarter that we're expecting Q2 to be. I just hope that Q4 actually will be what it's cracked up to be. But some people are saying that perhaps it won't be that good due to the limitations of ships from China when it comes to Tesla exporting, supposedly limited to about 42,000 exports a month, and production could be upwards of 90,000 a month. Some people don't think there'll be enough domestic demand to cope with that many units. This is just what I'm hearing, but I'm asking around to find more concrete evidence of how limited China's shipping really is. Equally, if any of you know, then leave me a comment. Aside from that, hopefully we get a good report and earnings call, and we can start turning that negativity we keep hearing in more positive direction. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.